Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for Thursday, May 10th, 2018. So, yesterday we did finally get that push through the 50-day moving average on the Dow and the S&P 500. That was a nice psychological boost for the market. Now the big question is, can the bulls, do they have enough energy to hold above that important key level? And we may get an answer to that early this morning in the CPI data. Now, normally I'm going to talk about the economic news a little bit later in the video, but this morning this is very important. CPI data comes in at 8:30 a.m. Eastern, an hour before the market opens, and that's going to be pretty critical to the day, I think. There's obviously an awful lot of concern about inflation right now, and there was an awful lot of conversation at the FOMC meeting about the potential of additional interest rate increases this year, and concern on inflation, the fact that they have really reached their target goals in both employment and inflation, and whether or not they're going to become more aggressive in their actions. So currently, the Fed is expecting, and largely the market is expecting, an increase, a 25 basis point increase in June on the interest rates, with a possibility of 2 additional rates yet this year, rate increases. If this number today were to come in hotter than expected, it's entirely possible that the market could speculate that the Fed will add an additional interest rate in the near future. So that could certainly flag some problems in the market. A place you might want to watch for that number or that clue that we could run into trouble would be the 10-year Treasury. If the 10-year Treasury trades above 3.033, that would indicate a new high for the year and could certainly bring out the bears. So be careful with that. Let's hope that number comes in cooler than expected, a little bit less than expected, showing that we're in really good shape, and we don't need another interest rate rise this year to keep that inflation in check. So watch that closely. That could be a key factor for today. Also, we have jobless claims. Those are expected to come in strong, up about 9,000, and very close to a 50-year low in jobless claims. And the Treasury budget is expected to show a surplus this month, and that's why it's showing that it could move the market today, a surplus. But that's largely just because of the big tax season and a lot of payments coming in. They're expecting maybe a surplus in that. So while we're here, we're talking about news. Let's talk just a little bit about earnings. We have about 390 companies reporting earnings today. And this is the last really big day of this earnings season. Tomorrow it drops off sharply. And next week, as a total, we have around 500 companies reporting. So considering 1,400 this week, we're really going to start pulling back on those earnings reports. But just because earnings reports are starting to diminish and second quarter earnings are kind of moving to the rear view mirror, that doesn't negate our responsibility as traders to check those earnings dates against the trades that we own or are thinking about purchasing, and having a plan to deal with that. So make sure you stay on top of those earnings dates for everything that you are doing in the market. With that, let's take a look here real quick at the overall markets. Dow closing above that 50-day moving average, starting to and closing above the downtrend line, which is really important. I think for the market, it's a key psychological thing that to see, oh my gosh, we can finally breathe a little bit of sigh of relief that maybe we could catch a bid here and start working out. But we have that inflationary issue that we need to pay attention to today. So we're not out of the woods, and notice we have a lot of key levels here to be concerned about that will likely provide price resistance to the market. So the same is true for the SPY, the S&P 500 rallying above and nicely above that 50-day moving average yesterday. We're still below. We have this short-term trend line right here that we did breach above this week, but we have a bigger downtrend line here that we're going to have to deal with, as well as some important resistance levels. So keep in mind, we're not out of the woods. There's a lot of work yet to do if we're going to turn this market back into a bullish market. But it is very nice to see all four of the major indexes above that key support area of the 50-day moving average. Notice the Qs moved up nicely, testing another layer of resistance and looking pretty good overall as long as we can hold up in that area. Notice that the possibility does exist here on the Qs chart of a pretty significant head and shoulders type pattern that could form. Now, hopefully that's not the case. Hopefully we blast on through there, but we have to have our eyes wide open to both possibilities. Let's take a look at IWM. IWM proving still to be the strongest index out there and really working hard to approach this all-time high in IWM. Now, currently futures have been bouncing around, negative, positive. We're pretty close to flat, but that can certainly change as earnings come in and this economic data comes out. So be prepared today for, in the morning before they open, be prepared for just about anything that could occur. We could see the market respond nicely higher and really inspire those bulls to move in. However, if we see that 10-year treasury creeping up due to that inflation data, I think we could probably expect those bears to be emboldened and maybe push us lower. So be really careful. Make sure you have a plan to protect your profits and protect your capital if we were to do that, because a failure here, as good as yesterday was, and that psychological boost that we got in the market yesterday, a failure back below the 50-day moving average here would really be a crushing blow, at least for the short term for the market. And that would certainly reverse all those warm and fuzzy feelings that we're getting just in that bullish run. So not trying to predict anything here at all, just trying to lay out both sides of this potential hazard that we're in. We really need those bulls to step up and hold on to that support level. And a critical factor may be that CPI number this morning. So everyone, I hope you find these videos helpful in your planning for the day. I believe planning and preparation is far more important than luck. We don't want to predict. We don't want to try to assume that we know more than the market does, because we obviously don't. The market has a mind of its own and it will do what it wants to do. Our job is to read the signals out there and trade wisely around those signals. So try not to have a bias, try not to predict, just look at what's out there and have a plan on how you can potentially make money in either direction. So hopefully you find these videos useful for that. Everyone, if this is the first time you've seen this information, please do me a favor, click that subscribe button on YouTube and the follow me button on Facebook. These videos don't cost you a thing, and I produce a lot of information that is free to everyone. So no charge for any of this stuff, and I'm certainly not asking for any kudos. But if you do feel the videos are worth it, please drop a comment. I do appreciate that. It does help those algorithms show the videos to more people. And my goal here is to always be that voice of reason that tries to help other traders, not trying to sell anything, not trying to do anything special, but to help other traders visualize the market and perform better as a trader. With that, everyone, I want to wish you all a fantastic day and wish you great profits. We'll be right back here Friday morning, bright and early, to talk about the market again. Everyone, take care. We'll talk to you very, very soon.